The Bank of England has raised interest rates for the 10th time in a row, climbing to 4%, lumping further pressure on mortgage borrowers. The Monetary Policy Committee opted to hike the base rate from 3.5% to 4% to help bring down double-digit inflation, according to the Bank of England Governor Andrew Bailey.
And we need to be absolutely sure that we really are turning the corner on inflation. And that's why we've increased bank rate today. And that is why we will, of course, continue to monitor the data very carefully.
The bank says the UK is still heading for a recession, but stresses the economic downturn could be shallower and shorter than previously expected. Chancellor of the Exchequer, Jeremy Hunt, says the Bank of England are absolutely right to increase interest rates.
We recognise it is very difficult for families, businesses up and down the country when interest rates go up, but much harder for them would be if we didn't take decisive steps to bring down inflation, and that's why the Bank of England is absolutely right to do what they've done today.
So what is a recession? Well, it's when an economy has at least 2 consecutive quarters of falling output. We should see 5 quarters this time around, but it will be softer than those in the past, like in 2008. Why? Well, energy prices and inflation have begun to fall from their peak of last year. What you're all probably wondering though is how will this affect you? The bank says average household energy bills will likely drop below £3,000 from the start of July, but it still thinks gas prices will remain high for years to come. In 2025, they expect it to be 136p per therm compared to the average of 52p in the previous decade. Mortgage payments will increase by around £30 to £50 a month on top of the previous increases, which are between £200 and £400 a month overall over the last year. Deals being offered by banks and building societies are higher than they've been for years. Now is a great time to shop around for a better savings rate, but whilst this means savers get a higher return on their money, rates are still not keeping up with rising prices. How does the rate increase affect you? Let us know in the comments.